Welcome to Upside, where we dig behind the headlines of the news affecting European venture. Today, Mads, Lomax, and myself, and we are talking about SpaceX mega raise, but what are you really buying? Europe's Euro success, the North-South polarity has flipped. Now the South is rich and successful and the North not so much. We're going to dig into that. China's $1 trillion trade surplus. What does that mean for us? Unpacking US defense spend, having a look at that, and more chips, please, in AI Corner.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
But to start, we're going to look at DeepMind and the Department of Science, Innovation and Technology in the UK. Question for you chaps. Would you classify DeepMind as a UK business or not?
Well, it's owned by Google, so no. It's a simple answer. It's a UK origin business, UK
Well,
founders.
that's where I was squinting. Looking at it going, UK
No, it's a
signing
subsidiary
up
of
with DeepMind.
Alphabet. No.
Yeah, no, fair. So
What does it mean that a business is UK? If a German company makes cars with steel from a plant in Poland, are they German cars?
Well, nothing is from anywhere, is it? I mean, I always look at the iPhone
Well,
as an
that
example.
was globalization,
nothing.
which, is now dying. So,
It's not completely dead yet. Your point is well made. I think the truth is you can make an argument either way.
For both.
Depending on what case you're trying to make. I think if the argument
True.
you're making is there's incredible talent.
No, and also look at imagine, some of these public listed companies that we think of as European, like, I don't know, GSK or something. But if you actually look at the shareholder register, you might have a large almost a majority of like US endowments, pension funds, like money managers. So actually, none of the cap tables are really ever truly sovereign.
And that, I think, is the beauty of the era we grew up in, which was, as you say, the era of globalization, where we all grew closer and this stuff started to matter a lot less. And we've now been rudely awoken to a new world where all the sovereignty stuff matters a lot more, much to my disappointment, but that is where we are. And that's the reality we have to face and act accordingly.
It's very, very important these days, especially if you're investing in critical industries. If you take this back to the startup level, pre-seed, seed, series A, you do actually need to think more carefully now about sovereignty of your cap table. So obviously, if you're building in defense, you need to think about this. But if you're building actually in many like critical industries now, I mean, in the UK, they have this, I can't remember the name of the law. The law in the UK came in about 4 years ago that needs you to, if you're in one of certain listed industries, you need government consent, for the large investment to happen or the M&A to happen. So definitely is a thing for our time.
I just don't know where the lines are. Anyway, I'm going to classify DeepMind as a UK business.
If you remove the fact that it's a wholly owned subsidiary of Google, then yeah, it's very, very British.
If you remove everything that's fundamentally true, then you can have your facts as you please. Well, anyway, let's dig into what they've done. So DeepMind, Department of Service, Innovation and Technology in the UK, they have got together. They've, as of today, the 11th of December, they have announced a new partnership. Now, it feels to me like it's an extension of budgets that have already been allocated, but DeepMind has been named as the part of the provision. I don't know if that's true, but that's my sense. I couldn't find much in the press release around the money and the budgets, but it feels like we have the budgets approved, but DeepMind is going to be the partner. And what it means is new research lab in the UK, expanding partnership so we're going to look at the AI Security Institute and look at what's going on there. Lomax, maybe you can kick off with a bit more of a kind of a scene set for what's going on with DeepMind and DSIT.
Well, I think this is interesting, maybe ignoring the government bit for now and public services, AI and public services, more just there's a whole thesis that has been evolving and people have been executing against the AI scientist effectively. There's a lot of science is done by trial and error. Well, if that historically was done manually by scientists, it was very slow and by definition constrained by how fast the scientists could run experiments. Now with AI, with both software and robotics, so you have the software which actually in silico can design and run the experiment, and then the robotics aspect which can actually run with whatever materials you're working with. this whole thesis has been, I mean, look at AI for drug discovery, which has had a lot of money gone into it in the last decade with mixed results, but I think we're seeing better and better results now. This is now happening across materials. We see, Cusp AI, Physics X, etc. So this is just another example of this, which is we can use AI and robotics to run mass experiments at mass scale to unlock new materials. In this case, I think they're particularly interested in superconductor materials, which can carry electricity with zero resistance, but there are other things they'll be looking at. I think this is hugely exciting. It normally requires a lot of money to do this properly, which is why sort of seed stage startups, I think, have been constrained in the past by capital. So it's a good place to do it. It's good that it's happening in the UK. And the final point I'll make on this, why I think it's good it's happening in the UK as a seed investor, is that what often happens is the really smart people who are working on these projects sometimes spin out and create their own companies. I think GDM is the phrase that is used in our industry. The Google DeepMind ex-employees who spin out and create their own companies. We've seen that with Latent Labs. It's just one example. So I think that's exciting for me. It's great it happens in the UK because then that talent kind of spits out and creates new companies. But there is a government angle here as well, Mads, which maybe you had a look at.
Well, there's one particular thing I want to pick up on. I mean, we're still in the sort of third anniversary of the ChatGPT release. And one of the things we talked about back then is this incredible potential of, for the first time in history, being able to provide a tutor for every child. I think it's the most transformative thing we can imagine in education. And, we're 3 years in, and we know these things take time. The government is a bit of a super tanker. It can be hard for them to adopt, get things done. We know that many schools still struggle with how much should we use ChatGPT and other LLMs in education. Is it just something that students use to, answer their homework? Can you really be used to learn as a tutor, as a mentor? What we're seeing now here as part of this new partnership is that there's going to be a focus on creating an education-focused version of Gemini, grounded in the national curriculum, which you think is a wonderful idea and hopefully a signal that the UK government and UK education is going to take the use of LLMs even more seriously in education, because I just think it is transformative on a level almost unparalleled anywhere else.
They've also got the more wide public services mandate, I think, to create efficiencies behind the scenes. So it'd be interesting to see how this all connects and how this all rolls out.
Dempsey is obviously the closest you get to a super scientist rock star. I mean, he's just incredible. And kind of knowing that he is in there, he's focused on this. And yes, like you guys kind of said at the top of the call, is this a UK firm? Is this a US firm? The lab is in London. It's led by a Brit who we know really cares about the success of the United Kingdom. And that's great to know. So yeah, I'm definitely a big fan of this.
Yeah, the AI tutor thing, by the way, I think is fascinating. And there are some really cool companies now in seed stage, Series A stage, Series B stage that are coming through that are executing against that thesis. So I think it's hugely exciting. Don't forget the Transformer paper, attention is all you need, was not done in DeepMind, right? It was done in another part of Google.
Was it not? I didn't know that.
It was done in like the Google Brain research team in the US, no? And so actually, maybe DeepMind team weren't working on Transformers, but in a way, they kind of like, as the sort of marquee AI, research lab of Alphabet, they kind of missed the initial stage of Transformers. But the point is that it's great that there's still a lot of investment behind Google DeepMind. And it's exciting. And as I said, it's great it's happening in the UK because you actually end up, what I get excited about is founders who cut their teeth there and come out and want to go and build big companies.
Yeah, let's do it. Let's bring them
Having
on.
been basically taught and trained with the resources of Google, effectively.
Talking of big companies, thank you for the segue. SpaceX. So they are doing a massive fundraise IPO. Lomax set this one up for us because I think most people will know that there's big noise this week about SpaceX raising. But I guess my core questions are, what are investors really buying? And is space worth 1.5 trillion? So that's what's going on in the back of my head. But set this one up for us, Lomax.
Well, I don't think it's confirmed, but basically the news has come out that SpaceX is strongly considering IPOing in 2026, so next year. Before, SpaceX has raised, famous amounts of money in the private markets. Potentially, like many of these companies, why would you bother IPOing if you can keep raising money in the private markets, if you can potentially do secondaries to keep your employees getting liquidity so they see value? Why would you bother, incurring the costs and or going through the scrutiny? But clearly feel that this is the right time. As Mads has said here before, sometimes you run out, quite frankly, of money in the private markets. And SpaceX still has a lot of money to raise. So they're thinking of raising 30 billion next year. The valuation mooted is 1.5 trillion. Now, I think the last valuation that SpaceX raised money at in primary was only about 150, 200 billion. They've done secondaries at 5, 6, 700 billion. But this is clearly a massive step up. What are investors getting, Dan? Well, look, I mean, the golden goose within SpaceX is Starlink, which is a massive, like, monopolistic business growing fast and printing cash as far as I can tell. Now, obviously, SpaceX is private, so not all the numbers.
Lomax, you say that they've only been profitable last year, or did they break even last year? I don't think Starlink
they broke even last year, but they've also got the launch business, so the numbers are generally conflated across, and they're doing huge investments in Starship as well. If you look at analysts, like Starlink is projected in 2026 to do $16 billion of revenue and potentially around 10 billion of EBITDA. So it's turning into a real golden goose, that business. You know, they have nearly 10,000 satellites in orbit, 8 million customers, and growing fast. And there was, before this news, always a possibility of them demerging and effectively, you know, Starlink comes out of SpaceX and does its own IPO, but that may be put to bed now. What are you buying? So you have that Starlink business, which is monopolistic, printing money. You have the launch business, which is also largely now monopolistic, right? It's less profitable on a cash flow basis, but it's still a very, very unique asset that they've built. And then you have this effectively exponential, uncapped upside with SpaceX, which is the Starship program, which is these bigger ships that will do, you know, trips to the moon, to Mars, eventually deep space, which again, is like, it's so far ahead of everybody else. They'll be the only people who can run this program. I think they're building this big factory now in Texas to create, I think, is it 2 Starships a week, maybe 3 a week or something?
No.
So it's insane, automated. So you end up with, what are you buying as an investor? You've got the hugely profitable and growing Starlink. You've got the launch business, and then you've got this uncapped upside with Starship. Now, 1.5 trillion, I don't know. I mean, if the business next year is going to do 20 billion top line, because, you know, Starlink is still about 3/4 of revenue. I mean, that's a pretty funky revenue on, you know, it's nearly 100x revenue, a multiple of revenue, not of EBITDA, right? Or not of earnings. But then, for the reasons I just said, it's Elon Musk, it's monopolistic, they have a huge head start, you know, a bit like, in a much smaller way, Revolut in Europe is just like absolutely tearing ahead, and it's just like winner takes all type position in its market. SpaceX is the same in clearly a much bigger, a faster growing market. We're only just
at X and Grok and Tesla. Are they all under the same banner now? Wasn't there a roll up? Didn't
no roll up?
Elon
No.
throw X into not a roll up? Wrong turn of phrase. But didn't. Wasn't there some kind of merge? Didn't Elon throw X into something else?
Well, X and Grok, I think, are in the same holding. But no, these are all very separate. One thing that was interesting is that I found that, I mean, maybe this is perhaps obvious. So Starlink, SpaceX employs 13,000 people, which actually is not many. Tesla employs 125,000 people. Okay, so it's a big. Anyway, I think that's what you buy with SpaceX. Why is this relevant for Europe? Well, it's sort of, you know, you look at this and you think, well, we've missed the boat here. SpaceX has Starlink and launch. In Europe, it's more fragmented. You know, you have on the launch side, you have ISAR, who only did their first launch this year, which wasn't even successful. You have Rocket Factory Augsburg, who need to change their name. And then you have, on the satellite constellation side, you have Eutelsat, who also need to change their name. It's horrible. But importantly, Europe is more fragmented, it's behind, it's capital constrained, and this is winner takes all.
Yeah, we're going to talk more about Europe in a minute. Mads, where else would you take the SpaceX piece?
Lomax touched on a lot of the good pieces here. Clearly, if you look at the value of the core business, so the launch and the Starlink connectivity, you can maybe get that to 300-400 billion of value on generous multiples. So that's about a third of the price tag, generously. And so what is the rest? And you're absolutely right. Starship is part of it. There's another thing, Lomax, I don't know if you touched on, which is the whole orbital data center thesis. You know, Elon Musk has built the largest data center kind of AI factory on Earth, which is this colossus. But the challenge we have is energy. And so there's this whole notion of, well, in space, you have solar intensity that's 6 times higher than on Earth. You have free cooling. If you think about the transmission of data, light travels faster in a vacuum than it does in cabling on Earth. And so is there kind of an orbital data center thesis you can buy into? And so this is actually quite interesting. You might say there's a bull case there around it, which is there's a ton of places on Earth where you are struggling to get the right level of compute today. Maritime, you have a lot of data coming out of in oil fields and oil extraction offshore. You have defense, you have remote places where you don't have data centers nearby, but where if you can do AI inference in the sky and beam it up and down, that might be a great value proposition. And so smart money has been piling in. NVIDIA has been backing Cloud. DoD has been having contracts. China has been launching compute constellations. And so if you think about Musk's position in all of this, well, he's already got the largest compute cluster on Earth over at X. He's got all the technology around batteries from Tesla. You've got the SpaceX launch economics, and you're well ahead of everybody else. Computing on the edge, you're probably still at least 5 to 7 years away before the edge can catch up in a meaningful way. So there's potentially a window there. The criticism, as some people are saying, is, look, there's really zero revenue in this today. In terms of the compute you can actually get to function in space, it's still quite small because the kind of power you need is massive. The amount of solar panels you'd need to create a gigawatt, if that's the scale we have, is massive. I mean, that's you need more for one, gigawatt orbital space center than the mass of the entire International Space Station. So these are potentially big projects, but it's interesting. And I think that's part of where the market is inferring some value to this kind of proposed SpaceX IPO.
Which is, I think, by the way, I mean, a matter of time before we started talking about data centers in space. I mean, every time I open LinkedIn these days or Twitter, it's plastered all over, largely in thanks to a British founder, if we want to take this back to Europe. So Philip at StarCloud, we talked about, Mads just talked about, who are now sending an H100 into orbit, is British. He's doing a great job of beating the drum for this concept. Congrats to him. He's a Brit that also has found his voice and mastered narrative and storytelling, because I think he's doing a great job on that.
Are you sure he's a Brit?
Well, I know. But interestingly, I do remember chatting to him, and he said he's basically building the company in Redmond in Washington. And he said, that's the only place in the world I could build this company. Yeah, forget Europe, forget anywhere else. Talent. The only place in the world I could build it. And then if you go back to the Outsized Ventures thesis of backing European founders who often need to go to the US to build big businesses, it's kind of bang on. Props to him, props to my friends who invested in him. I think it's a cool thing. And it's very, very necessary.
Let's talk about your backyard, Lomax. So Portugal has won. Clap, cheer, rah, rah. Yeah. Portugal has won Economy of the Year in The Economist. So it's not all doom and gloom in Europe, although we are going to get a little bit gloomy in a second with some punches in the face from across the pond. But Lomax, tell us what's going on in your backyard.
So The Economist every year run a little competition called Economy of the Year, where they screen on 5 key macroeconomic indicators, which is inflation, deviation from inflation targets, GDP growth, employment, and stock market performance. It's a competition of the 36 wealthiest countries in the world. And last year, Spain won it. And this year, 2025, Portugal came on top. With 2.4% GDP growth, inflation control at 2.3%, stock market up 20%. The stock market, mind you, is only 100 billion in market cap, so it's relatively small. It's great. Look, I mean, they only use these 5 indicators. So, for example, in Portugal, if you look at the average monthly wage net is about 1,100 euros, which is like a third of what it is in the UK. So it depends what data you actually use. However, on these metrics, Portugal comes on top. I actually thought Poland might be nearer the top, because Poland's actually GDP growth at the moment is nearly 4%, 3.8%.
Is it?
But I think they do badly on inflation and employment. The UK is woefully near the bottom. The US is in the middle of the pack. And both didn't do so well based on inflation and employment, actually, with the things dragging them down. And growth. I mean, the UK, there's basically no growth, right? So,
well, it's nice. It's nice that the Southern European countries are flip the script, right? And this was not the case 5-10 years
Well,
ago.
I mean, do you remember the pigs? Portugal, Ireland, Greece, and Spain. The pigs in 2011, 2012, when they were, yeah. I mean, it's a big turnaround. The Germans were going to kick the Greeks out of the euro and all this kind of stuff. I think things have changed.
I remember it well. So let's go into Europe. So it has been a mixed week, as it always is. There's been a bit of Euro bashing. Trump has been savaging the EU, apart from obviously his autocratic buddies. China's flooding the zone. They've got a $1 trillion trade surplus of goods, which is probably going to grow in 26. So there's going to be a whole more raft of Chinese products coming through at a low cost. EU's answer of made in Europe, this kind of mandated made in Europe directive, or I don't know if it's going to be law or directive. Well, there's been a massive backlash, and I think it's going to be voted on the 16th of December. It's going to go back, which was effectively a motion to encourage/force European companies to buy European. I remember when I was a kid, Made in Britain and the Buy British campaigns in the 70s and 80s. But the challenge you had was that the British products weren't very good, and everyone could see Japanese cars, German manufacturing, products from all over the world. So it didn't really work that well. But I kind of like the idea of a Buy European or a Buy British if it comes to pass. So we've got China, we've got Europe being punched in the face, and we've got the US, obviously Trump turning his back on us. Mads, where would you start with this?
I think let's start right where you are. I mean, the US are talking about this new national security and safety strategy, where they're saying Western Europe is just no longer a top priority for the US. They favor sort of the Central and Eastern European countries, where they feel there's more kindred sentiment and migration and bureaucracy, etc. The Trump administration is very keen to do a deal with kind of to end the war in Ukraine and get, as they say, Russia back into the fold and do lots of trade. I think lots of people around the White House are eyeing opportunity for lots of new deals and more business to be done there. And kind of these pesky Western Europeans are standing in the way, talking about, outmoded things like freedom and democracy and, not attacking your neighbors and all that stuff. And obviously the Trump administration is not having any truck with it. At the same time, you've got China flooding the zone. We've seen for the first time a trade surplus of more than $1 trillion. And that's just in 11 months of the year. We've just never seen that before. And the US tariffs, they seem to not really be working, because although exports on a direct basis might be down, they're up via other channels. And so overall, Chinese exports are just going from strength to strength, and China keeps increasing the global export share. And it turns out when you spend decades trying to perfect the things you do and becoming the world's best at something, well, guess what? Lots of people want to buy your stuff. China's GDP on a nominal FX basis is still smaller than the United States, but on a purchasing power basis, it is actually larger. It's the largest economy in the world. And that means that if you look at the output, if you look at the things the country makes, the Chinese economy makes more than any other economy in the world. And so that's, of course, remarkable. It's also remarkable that there is such a big gap. On purchasing power parity, China's GDP is 35 trillion, but on a nominal FX basis, it's only 18 to 19 trillion. So that's a 35% gap to the US. And the fact is that because you have such a big swing between the two, well, really people are saying this is because the Chinese currency is undervalued. And so the question is, what would happen if that swung into place? Well, firstly, China would then have, on paper, the largest economy in the world, but it would also make their exports less competitive and make it easier for others to compete. So there's definitely contention there. And why can China do what they do? Well, it's because they're not, again, having this, this thing that's called democracy, right? They're not lumbered with that. We have been producing great things in Europe, but the challenge is the surplus we are creating kind of by the democratic institutions. We are now, voters have co-opted those democratic institutions to funnel so much of the surplus into the welfare state, into welfare, into, things that are nice, but don't necessarily fuel future growth. And that means that, every year we just sink a little bit more into debt without our economy getting better. Whereas the Chinese are not struggling with those pressures. They don't have democracy. And so all the resources are funneled into, making the country more productive, keeping the currency down and exporting things and just winning more and more market share. So we're really caught in between United States that no longer seem to care much about us, and a China that is actually out to get us on a competitive basis and are producing great things. And we have to think about what does that mean when we think about how to position ourselves for the future.
Some of the big trade surplus also stem from a lack of Chinese domestic demand for international goods.
Well, of course, that's right. I mean, the two things go hand in hand. When you have a country without pensions, without a welfare state, people, they tend to save more because they are concerned that there might not, if there is a rainy day, there might not be a safety net to catch them. And all those savings are then funneled back into the economy or into exports, right? Instead of the Chinese domestic economy consuming the goods, well, they're exported abroad and sold to others. So you're absolutely right. And the only way to really fix this is you have to fix Chinese domestic consumption and get that up so they start buying more stuff. But how are we going to do that from Europe? I mean, that's really the question. I don't think we have many levers there.
It sounds like a massive cultural shift.
No.
Lomax,
We also got
pick up in there.
No, I mean, we also got beaten over the head by Elon Musk, right? We mentioned on the pod last week that the European Union had just fined X $140 million for infringements of our dear friend, the Digital Services Act. This prompted Musk to, call for this dismantling of the European Union or the European Commission, and how everyone's been betrayed, how we all need to throw resource weight behind the real parties that say it how it is, which is the AFDs of this world, how Orban is great, how Meloni is great. I think actually Meloni is a really good bridge potentially between the EU and the US, and is much more credible than Orban. But yeah, with the US defense strategy, the NSS, the National Security Strategy, and Musk's, not curveballs, but his grenades that he's been throwing in off the back of this big fine, it's been a pretty chastening week for Europe, I would say.
Can I pick up on that for a minute? I mean, one of the other things that was discussed was this lack of a single market in financial services. And there were sort of talks out of Luxembourg about how they've proudly been blocking the idea for capital markets union. They say it would create a monster. We don't want central regulation. The flip side of that is instead we have dozens of regulators today and no single market in financial services.
I just mentioned it. Like, Portugal has a stock market of 100 billion market cap. Like, what's the point in everyone having all these things, no?
Yeah, so there is the stock markets, but there's also the ability of fund managers to raise capital across the continent.
Oh, of course.
To use
yes.
a single set of rules as opposed to being forced to use the national private placement regime, for example, in each country they are looking to do business. That's a huge thing. And in fact, specialists are saying that this is costing European business as much as $100 billion or euros every year in lost productivity just for all those trade barriers we're facing internally across Europe. That's a huge problem. And back to Musk, you're absolutely right. He's lobbing grenades. One of the things he did say was the European Commission and the European president should be elected by public vote. And there are good reasons for why they're not, but there are also good reasons for why it's probably the only way out of the mess. Because one of the reasons why it's so difficult to harmonize is because there's no real democratic or public mandate behind it. Who is the person that's going to stand up and champion this? And today it is, yes, sadly, unelected bureaucrats. And why are they unelected? Well, that's because if you are a national regulator or a national politician, the last thing you want is for somebody being centrally elected to have a bigger mandate than you to actually say, no, guys, we've got to think about this, not just from our own little backyard, but think across the continent and think, how do we do things better? One of the benefits of the American model is you've got constitutionally, you've got the federal government is in charge of commerce. So if you have something that falls under trade, well, it is the purview of Washington. And until we have something similar in Europe, it's hard to see how we get the last bit of harmonization done so we can enjoy the benefits of a true common market, a true single market to benefit business and therefore also consumers.
Is there any way that could happen?
Look, sometimes it takes crisis. Sometimes things have to be worse before they get better. We've had decades of lots of progress around European integration. Then we've had decades of standstill. I think Brexit really took out a lot more of Europe over the last decade than maybe we sometimes realize. Not just the UK, but also everybody else that were busy trying to make it all work with the UK leaving the union. Yes, I think there's a scenario where this could happen, but possibly things have to get worse before they get better.
Goes like a lot worse. Very quickly, chaps, defense spending in the UK, I saw some reports this week pulling that apart. Lomax, have you got any
I think this is a
insight
small
on the
point,
spend?
and the small point is just like, let's just remember this, because there are lots of people in our industry at the early stages. I think some people very smart, some people running around like headless chickens, talking about defense and wanting to throw money into defense startups. And that's the current VC consensus. As we know, consensus in VC is a dangerous place to be. But the point is this: everyone has been excited about this because they see the opening up of defense budgets in Europe, prompted by what's been going on in Washington and what's been going on in Ukraine. However, and prompted by the actual commitments from these politicians to say we are going to increase defense spending. In the UK, it's by 2027 to 2.5%, right? At 2.5%? Anyway.
That sounds about right.
And potentially to grow that to 5% by 2035, which is just, so far off that I think it's meaningless. But what you're hearing from the ground, from the armed forces, is actually that these budgets are not opening up now as quickly as you would like, which basically means that we're still kind of stuck. And so actually startups selling into this, new government money are going to be waiting around for a bit, which, especially when startups are, raising money every 18 to 24 months, it doesn't really work so much on the startup time cycle. So I think the point is the messaging from the armed forces in various countries is that this money is a bit slower to come through. I mean, maybe they're always going to say that, but I think importantly,
there's been a bit of inertia before, though, hasn't there? There's been
but if you look at the UK, I mean, yeah, exactly. Yeah. There's they'll grab the headlines with the commitment, but the commitment will be down the road and it will often be fudged. Word of warning there.
Yeah. Okay. Well, let's move into AI corner, where I would imagine there are going to be some more kind of defensive, resiliency conversations potentially. So another kind of week of AI bubble popping conversations in the press. We've got private and public capital is moving out of big tech, moving out of AI. We've smelt before, we've seen before. Mistral, some new stuff out of there. Mads, NVIDIA can now sell H200s to China, but do they need them? And obviously there's now a kickback mechanism for Trump and his cronies, but China's developed a new chip company called More Thread. So loads in AI corner. Maybe let's start with the AI bubble popping, not popping.
Yeah, I mean, look, people have been talking about AI bubble for months now. And this week we've seen UK pension funds saying, look, we're going to cut US equity exposure because we have bubble fears. We know that the Magnificent Seven, I think they're like 25% of the MSCI world. There's an incredible concentration in those large companies. We've seen Standard Life reducing US exposure and boosting UK. We've seen Aon also selling some equities. Many of the pension funds have been out and saying, look, we're going to lighten kind of our exposure a little bit. But we also know that NVIDIA has been doubling since April, and really nobody wants to miss out on this rally. So the sense is, look, institutions might be hedging a bit, but they're certainly not fleeing, and we are probably not in a sort of overhang of a bubble yet. I think this rally has got longer to run, even if we're in a slight risk-off period right now. I think we're going to see 26. I think we're going to see further upside. Obviously, this is not investment advice, and always do your own research.
What's happening? So we've got Meta now going proprietary, Mistral, open sourcing. What's happening over at Mistral?
Yeah, this is the good news of the week. I mean, we've been sort of a little bit hiding away here in Europe on the foundation model for most of the year, actually, since DeepSeek came out about a year ago. It was Christmas time. We saw the first V3 model and then their reasoning model a month later. And Mistral, that was a pioneer of open source AI models. They've released DevStral 2, which is a new open source model focused on development and coding. And the benchmarks are stunning, very, very strong, performing, almost as good as some of the Anthropic models, but obviously much more cost effective. It's an open source model on human evals. It's beating DeepSeek. It's got, relatively light. It's about 123 billion parameters, so much lighter than some of the Frontier Lab models. So a lighter model, easier to run, a big, nice context window, and it looks like the our friends over in France at the Mistral team have really been pulling out all stuff to create a phenomenal model here. So great to see you're back in the game on the open source AI front.
I thought they were moving to the product side and moving away from the foundational side. Not that we would ever know what goes on behind closed doors, but this is
They are doing that too, in the sense of they're doing more work with enterprise. We saw the big deal they did with ASML earlier in the year, and they're going to be doing phenomenal work there to implement AI models and help the ASML team become even more world-class at what they do. So loving that. But the fact that they're also out there in the open source game and, and playing that game and sort of, in with a shout is great to see. Meanwhile, Meta, they've been pivoting.
gone the other way.
They've gone the other way. They're talking about a new closed model. I think they're calling it something as silly as avocado. I don't know. Right. So DeepSeek's model copied Llama's architecture. We know that Llama 4 then turned out to be a flop, and that triggered a major shakeup in the organization. It seems that Meta, they've been piling so much money into CapEx, and they're probably now thinking, how are we going to recover some of that spend? And are now looking at making avocado not an open source, but a closed source model. So the irony is really here, while Europe is back in the open source game, Meta seems to be pulling out, Meta being the original champion of open source. So yeah, all the pieces are moving around with the chessboard.
I'm intrigued to see where Jan LeCun ends up and what he ends up working on. And I hear that he's back in Europe opening some labs. So it'll be really interesting to see how that unfolds. And NVIDIA can now sell H200s, right? So NVIDIA can sell, Trump gets his kickback, there's 25% kickback there, but China has invented through more threads their own chips. What's happening here?
Well, when there was the Trump, Xi kind of China-US deal done, a few weeks back, I think we said at the time, look, they're probably going to find a way to get the NVIDIA chips open up for exporting those again, because Trump wants it and can see a way to get a cut out of it. And lo and behold, they have. The Chinese, meanwhile, have decided that actually we'd rather grow our own homegrown semiconductor infrastructure and economy. And so they are kind of one away. They've got their Ascend chips, and we've seen more threads have surged. They've IPO'd. That's another kind of NVIDIA spin-out team that's created there. So there are, new competitors springing up in China. And I absolutely think there will be NVIDIA chips coming into China because they need them and want them right now, the entrepreneurs and the corporates that are building AI. But it also seems obvious over time that China, they are absolutely focused on creating a domestic economy and domestic capability in semiconductors.
Stack, right?
Own the full stack. You talked about Otaki on our last pod, and I think that's absolutely what we're seeing, specifically when it comes to semiconductors.
Yeah, and why not? If you can be self-reliant, then just own the whole stack.
Well, not only that, but think about how the West has weaponized semiconductors. This is the rational response.
Well, we're living in a no-trust society now, where we're all decoupling, lack of trust. Everyone's going back to their own sovereign capability. So I totally get it. We reap what we sow. Anything else that caught your eye this week, Mads, in AI Corner?
Maybe if you want to go to deal of the week, there's the unconventional AI. They've raised a $475 million seed round.
What is seed anymore? Who knows?
Well, I mean, look, the company is 2 months old, so it's not like they've been around for years and years and they're ready to raise this Series F. I mean, it is literally a seed. It's right off the block, but it's very, very exciting stuff they're doing, again, in semiconductors. Kind of the view is, look, the traditional semiconductor, the traditional way to make CPUs is very energy intensive. They want to take something they call neuromorphic computing, which is effectively saying, look, if you think about the way our brain works, it runs on about 20 watts of energy, which is just a fraction of what a GPU needs. So if we can make processes that run more like biology and less like the semiconductors we know today, we can make them far more energy efficient. And the efficiency gain they're targeting is 1,000-fold. So, you think about some of the stuff we're talking about with the data centers in space and decentralized computing, places where it's hard to get energy. I mean, it's kind of that topic again, right? Energy is the bottleneck for data centers today. It's the bottleneck in space. Can we fix that by creating much more efficient semiconductors? And that's exactly what unconventional AI is targeting.
Very nice. Lomax, what was your deal of the week?
I actually have 3 deals of the week. I'm very, very greedy.
You
but
greedy swine.
They cover different areas. So one is a straightforward Series B, $40 million by Solve Intelligence, which is a kind of legal tech company building the operating system for IP by leveraging LLMs to revolutionize, as they would say, the patent life cycle. So basically, it's LLMs for drafting patents. YC company, 3 British founders. It's now kind of UK, US, which makes sense given how big the legal market is in the US. Mr. Stebbings at 20VC has led the Series A, and he's now teamed up with the good chaps at Visionaries Club to lead the Series B. It's an interesting company. I mean, it's a classic use case for LLMs, isn't it? Like drafting patents, I'm surprised there's not a company sort of similarly doing this for grants as well. In fact, there probably is. Those kind of things. I think the other deals of the week for me are, one is a commercial deal and one is an exit. Relation Therapeutics has signed a big deal with Novartis. So Relation Therapeutics, another AI for drug discovery company, as we talked about earlier, signed a deal, $55 million up front, which is a pretty big deal when pharma is doing deals with these platform drug discovery companies, potentially big royalty payments out the back end of multi-billion. Relation is a very interesting company to track. It's a London-based company. It's raised money for some pretty marquee international investors, including Khosla, NVIDIA, DCVC. Really, really good team. I think it's a company to watch. There's a long lead time on this because they're basically, developing, assets and drugs. But I think it's definitely one to watch. And then hot off the press today is the exit of Go Cardless by Molly.
Did they?
Effectively, yeah.
Did
I mean, it's not a cash
Great.
exit. It's actually a kind of share for share. It's a combination, effectively, a merger. 2 companies in the same industry, in fintech and payments, merging together. So it's a paper deal, basically, to try and give themselves scale to go to market and build a more global company. So I think that's an interesting, literally hot off the press today. Because Go Cardless was founded in what, 2010, 2011 or something?
It feels like in dog years, it feels like an old school business.
Yeah, but these things take time.
Yeah, baby. Well, New Quantum have been no slouches, so I'm pretty sure they're a Cambridge spin-out.
They are. Yeah.
And they have just announced their 60 million Series A, so their quantum networking just announced their 60 million Series A. So I wanted to give them a massive shout out and say a good speed to you, my dear Cambridgeites. Well done to you.
If you want to look for the upside, as we've talked about this before, but in quantum, the UK is a really, really interesting place.
Yeah. I mean, Europe, quantum fusion Europe feels quite substantial. It feels like there's lots of activity in both across Europe.
But in quantum, yeah, I mean, clearly in France, but in the UK, it's very, very interesting.
Great.
And even some of the biggest US players came out of the UK. So I think more to be seen here.
All right, my lovelies. Well, that was it. Short and sweet. I'll catch you wonderful people next week.
See you on the flip side.
Bye-bye.
Outside.